So during COVID, the outer 905 ran up the most, and then the inner 905, and then Toronto stayed somewhat flat. Well, guess what? Now that prices are coming down, we thought the outer 905 is going to be the first one to come down. Looking at the data, that does not look like it's going to be the case. Looking at Broker Bay, which is the insider platform for top brokerages, I tend to look at showing volume as well as offer volume because those are early indicators in terms of where the market is heading. And there's a lot of conflicting data. So we can no longer speak outer 905 or inner 905 because that is not how the market is segmenting itself. It is actually a lot more micro based, meaning from Mississauga to Brampton to Vaughan to Markham, the situation is completely different. So the unwind is actually not reflective of the pattern we saw during COVID. In this video, we're going to look at what's happening city by city. Hi, my name is Vas and I'm a chartered professional accountant by training. However, I'm a full-time realtor that's built and invested in real estate right here in York region, Toronto, and in secondary markets. Now let's get into the video. Before we start, just a little bit of context. Broker Bay is incomplete towards the end of each week. So therefore, when we're looking at the data, ignore anything past May 22nd. The data is not fully vetted. It's going to look like it's a drop to zero. It is not. That is just a Broker Bay thing when you're looking at data on a week-to-week basis. Number two, we're going to work our way from east, from Whitby, all the way to the west, Brampton, Mississauga, and then we're going to finish with Toronto in terms of stats. And then in the end, I'm going to compare how every single municipality rates and ranks relative to each other. So we're going to see who's performing well, who's not. And lastly, I've included a new metric where I've looked at what is the probability of you getting an offer right now if you have a listing. So for sellers, this is important. It's also important for buyers because I will tell you how many people need to come to your house for you to hopefully get one offer and how that compares to during peak times and what it would take to get an offer back then. I think this is important. It provides context and it allows you to manage your expectations. If you currently have a listing that is not performing very well, at least you will know whether or not is it performing below current expectations or is it performing much worse. I think this is important. Stay tuned for that at the end. All right, let's start with Whitby. As you can see, the trend line here for offers actually started going on a downward trend starting in January. This is a little bit odd. It's one of the odd ones out of all the municipalities. But as you can see, the real drop started happening here end of Feb and March, and then it's been a steady decline since. Now, this is offers, and this is the most important metric. But Whitby got crushed. Since the peak in January, we're now down 75% in terms of offer volume. In terms of showings, this is the funny one. There's one more municipality similar to this where you can see that showings are only down 31%. What this is telling me is there are a lot of tire kickers or potentially buyers that they're just uncertain. They're in the market, they're serious, but they're likely just waiting and trying to feel out who's desperate and who's not. And as I've said in prior videos, we had a lot of motivated sellers beginning of May and April for sure. And now all of these people are pretty much out of the market. And now the people that they're listing are usually not in a rush and they're not willing to bargain or negotiate as much as the motivated ones. Looking at Pickering, similar fate as Whitby. So Pickering was hit the hardest in terms of offers. We're down 78% since the peak, which was in January, and it continues to trend down. Offer volume is down. As you can see, it actually dipped during one of the interest rate hike announcements in April. And then it picked up and now it's dropping again. And I'm expecting to see another drop during the interest rate hike announcement that's going to come this week. And after that, we might have a bit of an uptick because people with old rate holds are going to try to lock in their properties. But at this point, it's a little bit hard to tell what's going to happen. So Markham is an interesting case study for me. Markham, for whatever reason, reacted very fast during the quote-unquote crash, meaning I'm not sure if it's just different buyer pool or information is digested differently by buyers in Markham, but the crash was the fastest in Markham. So effectively, end of February, when things started showing signs of weakness, Markham was the first to drop extremely quickly. So offers, as you can see, since the peak are down 61%. Showing volume is only down 34%. It's been steadily decreasing, and I don't expect this to increase or improve in the future. The story in Newmarket is a little bit of a tough read, mostly because, as you can see, there's a lot of variability week to week, month over month. It's trending down, but if you trend this out or if you put a trend line on it, it's actually not as bad relative to the rest of the municipalities. So we're down 58% in terms of offers. Showings are only down 33%, and it's fairly steady. Now let's talk about Vaughan. Vaughan has been one of the best performers so far. On offers, they're down 31%. So they had a big dip, so it was quiet in April, but it's starting to pick up. Again, we ignore this last little part. The data isn't complete here. We've seen a resurgence in Vaughan. So far, only 31% drop in offers, and showings are fairly steady at just a drop of minus 34%, and they're holding fairly steady, as you can see, towards the tail end of May. This is not something a lot of the other municipalities can say. Now, Brampton is a bit of a mix between Whitby and Markham in terms of what it's doing right now. It dropped extremely fast, just like Markham did, and what I find odd here is, so offers went down 66%, which is very low, yet showings stayed fairly flat. So they dropped, but they didn't drop that much. So that means you still have a lot of activity, just people are not putting in offers. So this is very similar to Whitby. So I don't want to call it tire kickers, but I think it's just a little bit misguided, because if you're a seller or a buyer and you see a lot of people going through these houses, you're thinking, oh, do I have a lot of competition? Chances are you don't have a lot of competition. This is just on paper, it looks like you do, but nobody's actually doing anything about it. By the way, if you have questions specifically about areas that you're looking at, feel free to text or call me with your question and the area, and I can pull up these Broker Bay analytics for that specific area. You should know this information before you actively and seriously start looking at a property. You want to know the behavior on the ground floor rather than just guess, right? If you want to understand market sentiment, Broker Bay is a fantastic tool to look at it. I usually review for all my clients what is happening on the ground floor on a day-by-day basis, and at least that way we can manage expectations. We're not overreacting or underreacting when we're seeing something, because what you're seeing on the ground floor, sometimes you need to verify with data. Sometimes we're right with our assumptions, sometimes we're wrong, and that's when we dig a little bit deeper. The interesting thing with Mississauga is, relative to the other municipalities that's been doing similar things, the one thing that's really interesting is Mississauga has held its price better than most other places in the GTA, and that's going to be revealed in the May stats when they're out. Toronto has had the least amount of showings decreases, only a negative 29% decrease in showings, and offers were only down 42%. So there's still a lot of activities, and it's been fairly stable from the end of March up until now. In conclusion, here's our data summarized. Mostly it's just Durham that you can point to doing the worst right now. For York Region and Peel, it's a bit of a mixed bag, because you have Brampton doing poorly, yet Mississauga is doing well. And in terms of stats, I find this very helpful, especially if you're a buyer or a seller. Why? During the peak, it was 13% chances. The probability of you getting an offer was 13% for every single showing that came through. In other words, let's take Whitby for example. You had 13% chance of getting an offer for every single person that came through. Now that's 5%. So what does that mean? During the peak, you would need 7 people to come to your house for every one offer that came in. Now you need 21 people to come to your house for you to get one offer. And this would be being the worst example. This is how it compares for the rest of the GTA, with Vaughan doing fairly well and Toronto also doing fairly well. Everybody else, as you can see, the discrepancy is pretty big, and the probability of getting an offer for every single person that's come through your house is much lower. If you're considering buying or selling in the current market, make sure you use a realtor that has access to Broker Bay and understands how to use and interpret this data. If you have any questions or you want to run any ideas by me in regards to real estate, I always love chatting real estate. Give me a call, text me, or email me. And until next time, enjoy.